What's going on? Welcome back to the channel. So today we're going to talk to you about PayPal. I want to go over some of the current data points, what really moved it, and then afterwards I'm going to play some of the key highlights from the earnings that you need to keep in mind. So I'm going to add chapters, so if you want to just skip right to that, definitely will not hurt my feelings. So with that said, let's get right to it. So PayPal closed at 77.73, down 13.16%, 77.38 the low, 82.69 the high. So their actual earnings wasn't all that bad. They did hit both the earnings per share and revenue marks. And then, like I said, I'm going to play their actual highlights from their earnings, but shorts did return roughly 11,000 shares. It's not a squeeze play, so 2.81% of the free floats being shorted works out to be 28.08 million shares overall are being shorted. You can kind of see that shorts have been maybe anticipating PayPal to miss on their earnings because they have been really getting down. Again, it's not a squeeze play, just pointing it out. The fact that it did go from roughly 2.09 to 2.8 definitely is a kind of a big jump. $2.51 billion worth of shorts are kind of in PayPal right now, so quite a lot. But generally looking at the options, 68 million in calls, 47 million in puts. 52% of all the options being done today are bearish in nature. Of the call options that were purchased, you see a consensus for it to recover to roughly around that $85 range, and then the bears are anticipating for it to be sub roughly 75. I did do a couple options with PayPal, as well as I did buy the actual stock itself at $77.50 near the end of the day, because I saw the price, figured why the hell not. Nothing significant, so I think it was like only like 50 shares, but yeah, honestly, I think their earnings wasn't as bad as what a lot of people really, maybe the market's seeing it as. These are all the transactions that did occur on the secondary market above $100,000. So quite a lot of big money was really getting into PayPal, as you can kind of see right there. So a couple big ones, 4 million, 2 million, 4, 1, and so forth. So definitely a lot of big volume. Aside from that though, with it closing at $77.73, trading between this S2 and this S3, so 76.42 is going to be that next strong support. Flip side, $80.79 is going to be the next strong target / resistance, followed by 83. So that's if a potential recovery does come. Aside from that though, these are some of the latest in analyst ratings that came out today. So you have $125, so the new highest rating that did come out, 97, 120, 103. So yeah, you have kind of generally fairly optimistic ones that did come out. No sells or downgrades. Last downgrade was done, looks like 6 days ago prior to their earnings. I've never really understood analysts giving ratings before the earnings, but nonetheless, this is pretty much your quick summary on everything. So with that said, like I mentioned, I'm just going to quickly play this for you, and then feel free to drop a comment if you did buy, sell, or whatever else. So let me know your viewpoint on all that. Don't forget to hit that thumbs up and subscribe. And then with that, let's get right to it.
Is expected to be at least 5%. PayPal targets 15.2 B minus 15.4 billion in transaction margin dollars in 2025 amid innovation and partnerships. Earnings call insights PayPal, PYPL, Q4 2024 management view. CEO 𝗪𝗓𝗧 emphasized that 2024 marked a transition year, with the company narrowing focus on strategic initiatives to drive growth. Key highlights included a 10% increase in total payment volume to $1.7 trillion and $32 billion in annual revenue, up 7%. Venmo monetization showed over 20% growth in debit card and active pay with Venmo accounts. The company introduced several innovations, including branded checkout enhancements, PayPal Everywhere, Fastlane, and expanded PayPal Complete Payments. Partnerships with NBC Universal, Roku, and StockX were announced to drive Fastlane adoption. CFO Jamie Miller highlighted a strong Q4 performance with 5% growth in transaction margin dollars, excluding interest on customer balances, and a year-over-year 21% increase in non-GAAP EPS. Outlook: PayPal projects full-year 2025 transaction margin dollars of $15.2 billion to $15.4 billion, representing 4.5% growth at the midpoint. Excluding interest on customer balances, growth is expected to be at least 5%. Non-GAAP EPS for 2025 is forecasted at $4.95 to $5.10, up 8% at the midpoint. Free cash flow is anticipated between $6 billion and $7 billion. Key strategic priorities for 2025 include scaling branded checkout globally, expanding omnichannel offerings, growing Venmo adoption, and enhancing small business solutions. Management plans to further leverage AI for customer experience and operational efficiencies. Financial results. Q4 2024 revenue grew 4% to $7.6 billion, and non-GAAP EPS came in at $1.19, a 5% increase year over year. Total payment volume reached $438 billion in Q4, with branded checkout volume improving 6% and Venmo TPV up 10%. PayPal generated $2.2 billion in Q4 free cash flow, contributing to $6.8 billion for the full year. Share repurchases totaled $6 billion in 2024. Transaction margin percent increased by more than 100 basis points, supported by branded checkout, Venmo, Braintree, and interest income. Q&A. Andrew Schmidt, Citi, asked about branded volume growth in Q4 and expectations for 2025. CEO Chris explained improvements in mobile checkout and continued rollout, noting that 25% of U.S. traffic is now on modern checkout experiences. 𝗪𝗠𝗧𝗛, Barclays inquired about unbranded volume growth. Chris emphasized strategic conversations with merchants, focusing on value-added services and leveraging PayPal's two-sided network. Harshita Rawat, Bernstein, questioned Fastlane adoption among large merchants. Chris highlighted over 1,000 merchants on board and ongoing multi-processor strategy to support enterprise adoption. Trevor Williams, Jefferies, asked about Venmo's contribution to transaction margin dollars. CFO Miller noted Venmo TPV growth of 10% and increased monetization through debit cards and Pay with Venmo, with further details to be shared during the upcoming Investor Day. Sentiment analysis. Analysts largely expressed optimism, but sought clarity on branded checkout growth, unbranded volume dynamics, and Fastlane adoption. Concerns about interest rate impacts on transaction margins were noted. Management displayed confidence in ongoing innovation, strategic partnerships, and financial discipline. Chris emphasized durable growth drivers, while Miller provided clarity on headwinds from interest rates and transaction loss normalization. Compared to the previous quarter, management's tone was more assertive, with a focus on execution and scaling innovations. Quarter-over-quarter comparison. Guidance for 2025 reflects increased confidence in transaction margin dollar growth and operational efficiency, compared to a cautious outlook in Q3. Branded checkout adoption advanced, with 25% of U.S. traffic now utilizing modern experiences, up from 5% in Q3. Analysts' focus shifted toward the scaling of Fastlane and Venmo monetization, compared to broader concerns about macroeconomic headwinds in Q3. Management sentiment appeared more confident and focused as key innovations gained traction. Risks and concerns. Management acknowledged potential headwinds from interest rate cuts, expected to reduce transaction margin dollars by $150 million in 2025. Transaction loss normalization was flagged as a potential challenge, particularly with the rollout of new products. Analysts raised concerns about the pacing of branded checkout growth and the competitive landscape for unbranded processing. Final takeaway. PayPal concluded 2024 with solid financial results and significant progress in innovation, partnerships, and monetization efforts. The company's focus on branded checkout improvements, Venmo growth, and omnichannel expansion underpins its 2025 guidance, with transaction margin dollars projected to grow by at least 5% excluding interest income. While challenges from interest rate impacts and transaction loss normalization persist, management's confident tone and strategic execution suggest a positive outlook for sustained growth.